Good evening, good morning, folks. Welcome to Pro Billionaire. Today, I'm going to bring you a new exciting video on supply and demand. Now, I'm not going to get into Wycroft supply and demand method. It's a dedicated methodology, and a lot of articles and videos are available on the web. You can get into that. Now, I'm going to get into a much more simpler way of identifying the supply and demand, and we are going to use Nifty and Bank Nifty for this. Now, this is not back tested on currencies and cryptos. Even in stock market, this is not back tested, but I do use this quite often in Nifty and Bank Nifty index, and it do work. I can vouch for it because I use it day in and day out. Now, what is the supply and demand? When you know supply and demand, supply means where there is somebody willing to sell. Demand is where somebody is willing to buy. So you know how this works. So you know the definitions of supply and the definition of demand. Now, market always moves in this fashion, right? If you know, market moves in a zigzag fashion, goes up and down, up and down. Sometimes it can go this way also. Now, what is happening here is why market moves in a zigzag fashion. Zigzag fashion because somebody, at the top, somebody is here, they are buying. Let's assume they are buying. Price from A move to B. Now here people are selling. So when they start selling, it's not just people are selling, right? People who entered here might be selling. There might be other people who might be shorting here as well. So it's a collective effort, right? Somebody who is just waiting, they want to short, and some people who have taken the position, they sell. No, together it creates a selling pressure. Hence market is dropping. So we can call this as supply zone, right? There's a supply zone. Now when market drops here, why price is raising here? Drops to C and market goes to D. What is happening here? Now people who sold here might be buying here, might have vacated the positions, which is creating the price to halt. And also some people who were waiting to buy at lesser price, they are entering here. Now one is people who are selling, they are stopping selling, which means they are booking their profit and exiting that position, and new buyers entering here is creating a demand which is moving the price up. Hope this is clear enough. Now here, when price moves like this, there is one simple methodology. So each peak will be acting as a supply and demand areas, or it might be acting as a support and resistance. When I call supply and demand, you can consider each peak. All right. Now, when you remove this, if you go here, price is falling. When do you think price can reverse? Now, this is the fundamental of price action. Most of you might be aware, whenever price is dropping, usually by default, this is not a what do you call rule written on the stone. So use your subjectivity rather than looking at it in an objective fashion. Market is always very dynamic. The last swing high in a fall will always act as a supply zone, which means if price starts moving high, when it comes, it will again fall. So this is the understanding or the fundamental assumption we are making in this methodology. What is the time frame we are using? We are using the time frame of 15 minutes. All right. Similarly, when price is moving up, when can it change the direction or trend reversal? When the last swing low is taken out, you will have a fall. And hopefully you understand the other basics, right? Near supply and zone, whenever it spends time, price spending time, price is coming here, it moved up. Now this is the last swing low. Price falls here. Instead of breaking, it is going to spend time like this and then breaks. Now this carries lot of weightage, and whenever price move back to this area, again it will drop. The simple assumption here is when the last swing low is getting defended, there is a good fight between buyers and sellers. And after spending enough time, it has taken a lot of conviction from sellers to break this support, or the, what do you call, uh, this demand zone, right? Where price was supposed to go up, the demand zone is broken. So when it comes down, so this area will become a supply zone when price next time revisits. So that is the assumption. We are going to use Bank Nifty 15-minute zone. I'm going to show you how you need to identify and mark them. So we are going to identify in a simple way one high peak. So hope you understood what I'm telling. So when you identify this peak, right? So this peak is price moves. So all these are peaks. These are trough. No, the bottom. Now, how we are going to identify? All I want is I need one candle to be marked at the peak on 15 minutes time zone. So this will be the top. Now I need two candles in any fashion. In a long back, I have shared this video, how to draw support and resistance. So understand, in any fashion, there should be two candles on left and right closing. Any fashion in the sense, they can come close like this, but two candles. So this will become the peak. So we are going to mark this as the supply zone. From top to the wick, likewise, bottom here, one candle, any two candles closing above this, we are marking this as demand zone. Supply, demand. So basically the idea here is when you see a V shape or a U shape, that will be a perfect supply or demand area. At the top, U shape, okay, U or inverted V, whatever. Now see here, what is happening is there might be some doubts. What about gap up, gap down? So if this is a gap up, so the top will obviously become a strong resistance. Any big candle on 15 minutes will always act as a support and resistance, the peak that you need to understand. Now watch here. I'm not going to handpick. This is how the market works, right? I'm going to replay. So I am going to cut it here. So this is where the market is. Understood? Or even further. Let me stop this one. You see, this is the bottom, right? You see, this is the bottom. I'm going to replay. It's going to be, it will be done in a quick fashion. Do not worry. Just watch so that you can understand. Now here, this is 19th May, market is moving up. So I want you to mark the supply and demand areas here. And then we will see how this worked from here. We always consider fresh area. When it is breached, then we are going to redraw the new areas. Understand this. Now I have a top. This is gap down. Okay, here I need to wait for another 15 minutes. So I'm not waiting. But can I mark this? I have two candles closing above. Yes, you can mark this. When it comes down, this is going to act as a supply area where price can move up. Similarly, can I mark this area? Right? Definitely I can mark this area. I have one bottom, two candles closing above. Now here, from this candle to this wick, you can completely mark, or you can mark wick to wick. It is again not objective, it is subjective. We are marking the zones. Now I would prefer marking the entire zone, or this depends. So if you want to mark this week or this week, you can consider whatever it is, right? Now what we will do here is, now we have two areas of, this is supply, this is also supply. I'm sorry, this is a demand, this is a demand where price is moving up, right? This is a demand. Do I have supply zone? See, this is where very strongly market moved up. Now if you see this one, I have one candle at the top, and this is acting as a Again, what do you call supply, demand zone, right? Not supply zone where price is falling down. Supply zone. Now here price has moved up. Now these are the fresh areas I have. I have one at the bottom. Again, this is a demand where price has gone. This is price has fallen down. So I'm going to mark two lines from wick to base, the body. Now we will see what happens when market starts moving up. Just keep watching silently. So I want to see when the price comes to that particular area, what happens. So I want you guys to watch it, if at all, if it comes. So it's going higher, higher, higher. Now it is forming a peak there. This is 15 minutes time zone, right? So it's forming a peak there. I'm moving the speed little faster. So let me pause here. Now we have new areas. Price did not test. It's going up. Now can you see here we have one peak? No, this does not qualify. This does not qualify. Close, right? I can use this one. Watch here. I'm talking about this candle. Oh, where is this, man? Okay, this one. I had two candles closing below this. This will become where price has come down, means it is supply. There's a supply here. If you mark this, this is a supply. 15 minutes. Now price comes, again goes back, test the same area coming down. Now this area is breached. So now for us, suppose assuming if we have another two candles closing down, so we will mark this area, this wick and this wick. Now see this creating a peak. Supply at the top is acting as supply zone where price is falling from there. See how it's coming down. Just watch, let's wait and see. Okay, this area is broken. It just broke, right? Now watch here, it broke. Where did the close happen? Now this was this area we marked on 20th May. This is 23rd May, right? 20th, so it was a weekend. So here, watch how price is respecting this previously drawn area. You understand the power of this. Now once it is breached, okay, we have two candles closing above, two candles closing here. So we are going to move this. Since this is a very long wick, we are going to cover from this area to this base. Whenever it forms, so you're going to remove the old one so that you can clearly see what is happening. Now can you see one more area here? This is again a supply area, right? We have 1, 2. This close is below, this close is below. We have one close below, one close below. So since it's a very long wick, you can take any on the left hand side or right hand side, mark the closer one, whichever is closer. So we have one more supply area. This might be acting as a demand area because it acted as a demand, market is moving up. Watch now. I'm just showing how the area acts in real-time market after you draw. So it will see here how this one came down, then went and facing resistance here. So we just now marked this area. This was on 24th on the same day. See how this area is facing resistance. What do you call? I'm used to this support and resistance, right? So see how this acted as a supply. Now it is acting as a supply, pushing it down, pushing it down. Now when a new area is formed, now this is a new area. Now when two candles after 30 minutes on the left hand side, you're going to adjust it so that you have a clear idea of price movement. Next, again, price comes, tries to break, closes, and you have two more candles. So you're going to adjust it. So you have a wider area of trading. You know what is going to happen in real time and you're adjusting it. This is exactly how it works. You saw in real time how it's working. Now it is dropping. Now hopefully you know that no supply and demand zone is permanent forever. You saw how it went, dropped, and then it broke, right? Now it broke this area. Now once we call it, right, once a resistance becomes a support. Now this area is violated, which means this is broken. Now I want a new area where I need two candles closing on either side, right? Until then, this area you can remove. Now I have this big wider area. This is on 9:15, 9:15, the next day, 25th. So whenever there is a gap up, the gap down will act as the supply area, right? And whichever is near, you can mark that zone. A week, so that you understand how you can mark after the previous zones are violated. Now just watch quickly. You will be able to understand this very beautifully, guys. Hope so far you're able to keep a follow on me. See now, watch this. The first attempt, the candle came. It faced resistance. I want you to watch this. So if you merely drop, you won't be able to understand it. Hope you're understanding how the price is reacting when it come closer to that area should give you an idea. That's the reason why I'm using the replay. Now this area, see, it broke in reverse candle, moved up, and then this broke. Now we have more than two candles. Close it. Now this area is violated. Now you're going to go. So you have one area here, this one, right? This one, fresh area, two candles closing below, two candles closing below. This one. Now this came here, went down. Now you have two candles closing below, two candles closing below. Should you mark this as an area? Now I wouldn't say no need to mark, but keep an eye, you know that, because we want previous areas to be violated. If it is very close to the previous area, you can extend the same area to this level. See what happens next day. To the top of this, it is acting as a demand area. Watch this one. Let's see if it's going to break. Yes, it broke. Now this area is violated. Now just watch. We are going to watch completely. All right. Now this was the previous supply area. Supply area is removed. Now this is removed. This is removed. Now you have a U shape, right? This is very important. Whenever you see a kind of U or V, it's going to act as a strong support, right? This is violated. It's been broken, which means it did not pay respect. This area is broken. Now we have three areas here. Another few minutes, we're going to close this one. Now you have prices going up from this particular position. I'm going to make it closer so that you can watch it. I'm going to move it a little faster. I want to see whether if price is coming to this area, how it's going to react so that you can watch and see. That is exactly why you can keep drawing new fresh areas and see how it works. So this is May, right? Suppose if it price is dropping after a sharp rally. So we want to see how this area is reacting. So we are watching, okay, after several days, 1, 2, 3, we are going to 4th day, 5th day, 6th day. Okay, we are having some drop here. Now new areas, it will be formed. You can draw it, you can keep removing it. So I just want to watch on these areas and see if price is coming down and how it will be acting. See here, this was one, you can by naked eyes, you can watch it. This was a supply area, same area, it acted as a supply, right? Now this was somewhere was a this was a demand area, I beg your pardon. So same way people started buying. Now this was a supply area, people is clearly facing resistance there. Prices are not moving up. Now somewhere here, okay, after several days, price is coming 3rd June. This area is violated. This will be gone. Now you can watch wherever price moves up, that is the supply area. Now we have two candles closing on either side. You have it. It was a gap down. Now that area is moved and you have two candles. This will become the, what do you call, supply area, because price is coming down. So because we need to understand the index is dynamic. We have weekly expiry, monthly expiry, right? So that's a reason we need to keep drawing them as a fresh areas. Now we see somewhere price is dropping. See how this is one demand area where price moved. Look how many candles are facing support in the same demand area. This candle, this is next day gap down, and then price is going very sideways. It is dropping here. Let's see how it is going to play out near these areas. See, first candle taking support. This is after several days, guys, after several days. Do you see, this is the first area we draw here on 26th May. Now this is June 10th. How the fresh area is respected. You need to understand, once it violates, it's not that it's going to go completely, but it gave a false breakout, then pulled back. And also in the during the initial stage, I showed you how it is acting in real time, how these areas are acting in real time. Now, what will be your trading time frame if you're using this? Now, if you're using this, your trading time frame will be 5 minutes. So I want to show you a simple thing. This is Cambrilla pivot on Nifty. All right, Cambrilla pivots Nifty. Thursday, I gave a call, right? I gave a call asking, this is the support area. If price is going to move, it is going to move from this area. From learning point of view, I gave you a call. Now watch this. This is Thursday expiry, right? Market is in uptrend. Now, whether you can use naked chart or you can use the pivot. So another 1 minute, the video will be over. This is very important. Observe. Sharp wick reversal, rejection, price moves up, takes support, moves up. If you remember, I had told you, if buyers want to enter, they want to enter here, and the target is 16,400 change. I had told you. Now this is where price goes, comes down, goes up, comes down, and goes. This is a double top, sorry, double bottom. Now here on 15 minutes watch, this is exactly first level happens, right? Two candles closing above this area. See, you can watch it. Price went, I gave a trade here. Price went 400. Next moment, it drops very rapidly. This is an inside bar. I told you bearish Harami pattern. Boom, price comes. Where does it comes, guys? Just watch. Where does it comes? It is coming to the same demand area where price took off. Watch here on the left-hand side. Price came into the same area and then it took off. If you watch on 15 minutes, this is an inside bar, bearish Harami pattern. This green candle is slightly inside this red candle. So you know this is a bearish Harami, this is bullish Harami, I beg your pardon. So market boomed up. What did tell that market is going to move up? Do you remember? In an uptrend, we are working on intraday. The last swing low will be defended, right? This is the last swing low. It comes. This becomes the last swing low and goes up on 15 minutes. What is the last swing low? This area, 15 minutes time frame. The last swing low, U shape, support. When the price comes to this area is getting defended by the buyers, and then market moves up. If you want to learn more on this magical way of drawing supply and demand areas, or you can call it strong support and resistance zones, go ahead, back test it on Nifty and Bank Nifty. You'll be surprised. There are so many trades which is available on daily basis. Forget about trading. At least it will avoid you from going on wrong direction, especially when market drops such a way. If you want to enter in between, you know we have one supply area here where price can move up. That's exactly what I'm trying to tell you. Now this is a demand area, right? 15 minutes. On a 15 minutes, we have two candle closing below. Now this entire R3 will become a demand area. Now R3 is a selling area, and near this area, see, you have a doji. On 5 minutes, it reacted. It did not close this candle and this candle. After a candle violated this demand zone, I'm mixing up, right? Violated this supply zone, price moved up. Now this is the demand zone where people are coming and buying. This is the demand zone. So you can call it as support and resistance, supply and demand, whatever you want to call it, you can call it, but you will have an idea on where people are waiting to buy, where people are waiting to sell. And also similarly, you can identify this is the last swing low or the last swing high in an uptrend where people can enter and defend the area with price action like inside bars, outside reversal, extreme reversal, weak reversals, doji, morning star, evening star. You can decide whether you want to buy or not. Hope this video was helpful. Please do share, subscribe, and shower your love. I will be bringing more and more of educational videos which can enhance your trading experience. Thanks a lot.